What if I said that player performance in the games is overrated when it comes to actual sports card prices and price movements? Let's talk through this. Hello to all my sports card collectors, investors, all of my collectibles friends. Back again for another video. If you have not subscribed yet, what are you waiting for? It's the big red button down below. Please help us out. Also hit the like, the notification bell. We're going to continue to bring sports card collectibles content almost every day, 5, 6, 7 videos a week typically. We'll keep it coming. Also, please connect with me on IG at SportsCardDad and also on the old Twitter machine. Is it almost the Elon Musk Twitter machine? I don't know. I'm the Sports Card Dad on Twitter as well. All right, guys, I'm so fed up and irritated. I'm not really irritated, but I hear this being said all the time on other YouTube channels, on podcasts, on Facebook groups, all over the place. You hear this, and it's this notion of if X player goes off in the playoffs, then look out, prices are going to go way up. You hear that all the time. And in reality, there is not a lot of data to support that on a consistent basis. Does it happen sometimes? Sometimes it does. Does it happen all the time? No, not even close. And so I want to talk through that. And there's also some bigger picture things that I've talked about many times on the channel before, and I think it's a good time to bring it back up again. And that is the macroeconomic stuff that's going on in the United States as well as globally, because it always filters out. It happens all over the place. 70 days ago was the last video that I put out in relation to inflation and how it affects the economy and how it can have an effect on sports card prices and collectibles. There are so many moving parts in collectibles. Let me also just say this, along with any other market. So yes, we do have macro things going on. There's also micro things going on. There's a million different things going on. But I don't think that this particular stuff, this macro stuff, is really talked about enough. I do hear it from, a couple people, few channels here and there do talk about this. There are other people in the space that also look at other markets that provide their own insights. And whether you agree with them, whether you agree with me, whether you agree with anybody, doesn't really matter. But I think that it's good to take in various viewpoints and just get information from different places. And maybe you can take something from it, little nuggets here and there. And that's what I do. I watch content of all different kinds, whether it be card stuff or whether it be just general investment stuff. If it's crypto or stocks or whatever it is, real estate stuff, that is all important things. And to me, there's a lot of similarities. There's differences, of course, in these markets, but there are things that we can glean from each one and use. Inflation. We've been talking about this for months and months. Like I said, 70 days ago was the last time I made a video about inflation, and it's come now. So all the speculation of, rising interest rates, there has been one interest rate increase and it's had effects, and they've only done one. The Fed has talked about doing 9 or something this year, and there's a lot of talk about price points and different things have already been kind of baked in. That's why you're seeing a lot of kind of flatness in markets, is because there's a belief that a lot of this bad news has already been baked into pricing for all sorts of markets. But like I said, now we're really seeing it. You see groceries, I don't know if you guys have noticed, but the cost of food has gone up. It's undeniable. Gas prices, undeniable. It's in North Carolina here, it's about $4 a gallon. 2 years ago, it was $1.80 a gallon, maybe $2 a gallon. Gas prices have certainly gone up. Used cars are stupidly expensive. Doesn't even make any sense. And that's just a few examples. So the idea that, this inflation thing is just, pie in the sky. No, it's actually real, and it's hit. And I think that the big kind of question mark is, how much more is coming? Is this kind of the beginning, or is this, just kind of what it's going to be, and then it'll kind of taper off? How did we get here in the first place? Well, the card market has benefited from a lot of the macroeconomic stuff. All the stimulus money that poured in over the last couple of years, the card market was a beneficiary of that on the lower middle end, and then also some stuff on the high end as well. So the card market has seen, along with other markets, has been a beneficiary of that. But but it can also be a beneficiary of the negative stuff too. And that's the stuff that there is a belief, and I think that it's just kind of common sense when you have zero interest rates for 12, 13 years, or basically zero. You have negative interest rates for a very long period of time. There are going to be consequences to that. There are going to be consequences. One is, I learned this just the other day, that Blackstone owns one out of 6 or 7 homes in the United States is owned by Blackstone and corporations like Blackstone. So what does that mean? Well, to me, of course you see real estate prices are at all-time highs, but that's a little bit scary that you have such a consolidation where a lot of the supply is owned by these whales. I'll use some crypto talk here. NFT talk. Whales own a lot of the real estate in the country. Well, what happens if the whales dump? What happens if the whales say, you know what? The prices of these assets are really, really high. Let's cash out. Let's cash out. A lot of that supply hits the market. Real estate prices come down, which frankly, a lot of this stuff is overheated. Maybe it does need to come down. But the thing that we don't know is if this is going to be kind of a mini recession or if it's going to be a depression. We don't know how horrible it's going to be, but we know that something is coming. We've got a national deficit here in the U.S. that is absolutely insane. We've got interest rates that have to be moved up to control inflation. But keep in mind, those interest rates also affect the cost of our own debt, our GDP against our GDP. It is a big, big ordeal. It's a problem. So the government is playing this balancing act of we've got to raise interest rates because we've got to control inflation, because out of control inflation is a bigger problem than high interest rates. And this happened in the 1970s. This happened where we had to have years. We had to have a few years of higher interest rates, and it's crushing for investors. It will. Asset prices drop. There's no way around it. I've also heard people say, well, card prices didn't move too badly during, different recessions, whether it be the dot-com bust, dot-coms being like early 2000s, where all the companies that were dot-coms everyone's excited about, pets.com, they all went kaput. And then, of course, you have subprime mortgage crisis, where a lot of people, stock market went all the way down to about 5,500, 6,000 at its low. Now what does it sit at, 35,000? That was a recession that followed it. And so what do politicians and the government do to offset that sort of stuff, that recession, those tough times? Zero interest rates, negative interest rates, and it helps boost everything up, kind of props everything up. Well, we've been propping everything up forever, and then now here we are, and it's going to be time to pay the piper at some point, and we just don't know how bad it's going to be, and we don't know when it's going to be. So it's kind of like when you hear the proclamations of, we're going to have a recession in 2024 or 2025, or cards are going to crash in 2023, 2024. It really has more to do with macroeconomic stuff than it does what's actually going on in the card world. You can have a lot of great things going on in the card world and prices just staying stagnant and not really doing a whole lot because of macroeconomic effects. If gas goes up to $6 a gallon, if a loaf of bread is $5 or whatever, these are all things that have an impact. And you might say, well, this doesn't really affect the rich because they're on the higher end. They're buying all the high-end stuff. It doesn't really affect them. Well, what they could choose to do, though, and what a lot of times happens if they're trying to time things up, is they will sell into cash. So they will look to move to cash. And so just the thought that, everything goes up, up, up on the higher end is not necessarily true. And that's something that's really going to be tested in the sports card market and overall collectibles market because we've seen such a massive rise. And yes, people will use kind of, we've got 86 Fleer MJ PSA 10s that were at $700K and now they're at $250 or $300 or whatever. It has corrected and this and that or whatever, but there's still more challenges ahead for that higher end. There's going to be pressures. There's going to be big pressures that are coming for collectibles, not just collectibles, assets as a whole. So this is not a bash on sports cards. Am I going to still be buying sports cards? Yeah, I'm still going to be buying sports cards. I'm still buying them now. It's just that I'm thinking about these things as I'm buying. I'm being very strategic and just trying to think of, okay, maybe for certain things I'll wait. Certain things I'll buy now. Other things I will wait. But so when we're looking at these types of things and we're wondering, why is somebody having such an amazing season and their cards really haven't moved? Well, you have to keep in mind that if we go back to January 2019, let's go back in time, 4 years, a little over 4 years ago, 3 years? What year is it? 2022, 3 years ago, a little over 3 years ago. Michael Jordan still had 6 rings. Kobe had 5. Tom Brady had 6 at the time. My point is these guys had already had magnificent careers, and their cards did not show these prices. They didn't show anything even close to this. So their player performance, being some of the greatest players of all time, did not have a gargantuan effect on their card prices. So I think that's something that we need to kind of look at over the next few years. Now, maybe we go through a few years of economic pain and globally, but we will come out the other end. This is a short term. When I say short term, I'm talking like, over the next few years, 3, 4, 5 years, 10 years, 15, 20 years from now, could be very, very different. And that's what I'm counting on. I'm counting on this being kind of like, we're probably got some shorter term pain. For some people, short term is like 2 weeks. For me, short term is like 1 to 5 years. Okay. So we probably got some shorter term pain ahead. It's maybe / probably. We've got some kind of, reckoning coming on the macroeconomic front, but when is it going to happen? What is it going to look like? How bad is it going to be? That's the pieces that we just don't know. But I think it's important to really talk about some of the big picture stuff and not just stay siloed in our little hobby / business market right here with sports cards, when there is a lot else going on that can have these types of effects. So guys, let me know your thoughts. Does this sort of stuff bother you at all? Or does it affect your buying, selling strategies? Have you thought about it? And if it's not, look, this is not something where it's like you even need to be thinking about it. You might think like, hey, this guy doesn't know what the heck he's talking about. And that's totally fine. But I think these are conversations that are not happening enough, really, in the hobby. And I'd like to have them. So here we are. Guys, leave your thoughts in the comments below. Stay healthy, stay awesome, and I will talk to you again later.